welcome to this webinar on biodiversity and finance with the question, how? The webinar is arranged by Swesif, which is the Sweden's Sustainable Investment Forum. And Swesif is an independent non-profit association, which was founded in 2003. And we have about 125 members, most of whom are asset owners and asset managers. And my name is Åsa Moberg, and I'm a member of the board of Swesif and will moderate this webinar. And as Kim said, we had another Swesif webinar on this topic a couple of weeks ago, and the focus then was on what and why. And one thing that was emphasized then was the need to act, even though we do not have all the data and even though there are large uncertainties. And by also using methods and acting under uncertainty, we can contribute to the further development of methods and increase the push for data and for solutions. So at today's webinar, we will learn more about 3 of the available methods for handling biodiversity in investment processes. And we will hear 10-minute presentations from Ecogain Biodiversity Index, which will be presented by Fredrik Höök, who is the CEO of Ecogain, and also the Corporate Biodiversity Footprint, which will be presented by Matthieu Maurin, who is the CEO of Iceberg Data Lab. And we will hear about ENCORE, which means Exploring Natural Capital Opportunities, Risks and Exposure, which will be presented by Jake Bedford, who's the Program Officer for Business and Biodiversity at UNEP World Conservation Monitoring Center. There are many more methods, both currently available and under development. And this selection of the 3 is not an evaluation from Swesif's side. But the idea is to illustrate the diversity of products and give you a first taste. And by presenting and discussing these 3 different methods, we hope that you will gain increased understanding on how to distinguish between different tools that have different scope and usability for different purposes, as well as identifying data gaps, limitations, and to interpret results coming from different methods. And also, to dig into the details, we have also 2 experts at our service here. They have read up on these methods and prepared some questions. And they are Beatrice Crona, who's professor at Stockholm Resilience Center, leads a research program at the Royal Academy of Science, and is also engaged in the newly started Sustainable Finance Lab. And the other expert is Flora Gaber, who is manager of ESG analysis at AP7. And they will comment on and ask questions in response to the methods, who is focusing on the challenges in capturing and measuring biodiversity. So, and as Kim said, we also appreciate questions from you in the audience. So please write them in the chat. And if there are questions that we are not able to answer during the webinar, we will try to provide written answers afterwards. Well, with that, I would like to invite Fredrik Höök to present information on the Ecogain Biodiversity Index. Please, Fredrik.
Thank you, Åsa. I will just share my screen. First of all, a short introduction to Ecogain, the company. Ecogain is one of the leading consultancy firms in Europe within biodiversity. And this means to have a full range offering within biodiversity. Hence, we know how to set and measure strategic objectives, how to translate biodiversity data to business intelligence and action. All strategy and data intelligence strive to prioritize correctly and to take true nature positive action. Enough said about Ecogain. Moving on to the main focus here, which is EBI, or the Ecogain Biodiversity Index. What is it? Well, it's a ranking based on companies reporting on biodiversity. So pretty much what is said on the sustainability reports is ranked. since here we have looked upon Nordic companies as well as Baltic companies, the biggest companies. And worth saying is that this is aligned with science-based targets for nature, which I would say is a continuance on science-based target for climate. And what does it capture? Well, I would say it captures ambition levels and targets of the companies, as well as the reporting and governance processes. So true action would also happen. And we also have questions about measurability and KPIs, which should be in line with science, meaning no net loss in biodiversity by 2030. And we also would like to see trends over time, and hopefully, obviously, we want to start a wave, so to speak, that brings other with them. So we would like to see improvements and trends over time. And the areas of this EBI and the coverage, and this is in line with science-based target for nature. Well, we look upon how the companies identify certain biodiversity risks, have they mapped their value chain, and how have they prioritized their hotspots. And the next theme is to set goals and measure goals, targets, and after that also taking on action. What kind of improvements can we improve targets and goals? And how have they reported, and how have they also monitored and governed these processes? We have 23 questions, so you could say that these different themes have 4 to 6 questions focusing on them. And obviously we have some key assumptions of EBI, and one is that reporting reflects reality. And certainly, I mean, we have a certain risk for greenwashing here, but what we do, as you saw in the other slide, we also look into what kind of action do they report, and over time we will also have measurability and KPIs, which will enhance the EBI even further. And there we have the second bullet: reporting will become more accurate by time as KPIs on biodiversity evolves. I would say that one of the biggest areas of EBI, why it's grown so big, it's the reason that we don't have the measurability or the KPIs today. So this is EBI is kind of something which will just take on how to say, a substitute for true KPIs, I would say. And another key assumption is that the power of good example and inspiration. We would like to inspire others to do good in this area of biodiversity, and to see good examples that what you could do, targets that you could set up, and action that you could take on. And that will also bring on certainly degree of competitiveness. Where I would reckon that if you see an industry competitor or colleague that has a greater ranking than yourself, then you would like to be inspired and actually have a better result than that colleague in the industry, is my guess anyways. And the data and scope of EBI, as said, sustainability or annual reports available in English on the homepage of the company. So far we have also had it in Swedish, but next year it will only be in English. And the latest report, which is published on the company website on the 26th of April, we launched this and market this on the Biodiversity Day, the 22nd of May, meaning we need the reports to be reported, so to speak, the 26th of April. And we have also the scope of the 100 largest companies in the Nordic region, the 50 largest companies in the Baltic states, the 20 largest companies in each country, and the 100 largest Swedish companies. Limitations and development ahead. As said, lack of data on actual impact. EBI measures what is reported. And lack of means to ensure accuracy. You saw the different themes or spheres, and looking at identify and prioritize, for example. I mean, we can't be really sure that they have identified the correct things in their value chains or prioritized correctly in line with that. Monitoring of actual biodiversity performance will develop as measurability of biodiversity develops. And I mean, as said, we have a certain lack of KPIs. But already next year, I would say that by science-based target for nature, those KPIs will get in place. We will have a stronger focus on acting coming years. Right now we have a strong focus in setting targets and measuring targets. And hopefully we will change focus in coming years to act. And continue alignment with science and reporting, for instance, EU taxonomy. We follow that closely in order to secure that we also develop the questions that we do have. And the use of machine reading, which we have enabled, will also enable more companies effective process, measurable process for ourselves. And we will increase the scope to the 300 largest companies in Europe 2022 and the 200 largest in the Nordics. And who could be the users of the data? For sure, investment managers. We have banks, we have Nasdaq that present these kinds of data when doing investments and analyzing risks. Assets owners likewise. But we would also like management teams and board of directors to look into this and to set targets for themselves and by themselves. And of course, I mean, we would like this to set us on the map as one of the data providers ourselves. And we have a few other strategic initiatives in this area going on. Thank you. Just in time, I think.
Great. Yes. Well done. Thank you so much. And we will start with a question before we go to the next presentation. So Fredrik, if you could just, yes, take away the presentation. Thank you. Flora, would you like to pose a question to Fredrik before we go to the next presentation? Thank you.
Absolutely. Thank you very much, Fredrik. I think it was very valuable to read your report, and I urge also other investors to do that. So in your report, you mentioned that it is important to understand the business case for biodiversity.
Right.
And that includes understanding the company's biodiversity related risks, as you mentioned.
Yeah.
Do you have specific questions in the index that looks at how companies describe their business case for biodiversity, and also perhaps a question on how they report on the company's financial risks related to the loss of biodiversity?
Yeah, we certainly do. I would say we have 6 specific questions in that area, also addressing the financial risks. So yes, is the short answer to that.
Do you want to continue on that, Flora? Dig into it more, or are you satisfied?
Perhaps you can give us actually some examples of what questions you actually look for, what information you look for when you ask for instance, biodiversity-related risks.
Hold on, I'm looking into, so I should give you a clear example of one question, because I think that would help you pretty much. I can't find it right now. Could I get back to you with that? I could give you 2 or 3 examples of the questions actually, because I think you need to understand the questions in order to answer that in a correct way. Is that all right with you?
Absolutely. We can take it in the questions and comments at the end.
Yeah, let's do that.
Okay. So thank you. I think then that we go to the next presentation. Thank you, Fredrik, and Matthieu, Maurin. Please, will you present the corporate biodiversity footprint for us? Thank you.
Thank you, Esa. Good morning, everyone. You're still hearing me, right? Okay, so
yes, yes.
I take that as a yes. So good morning, everyone. Matthieu Maurin from Iceberg Data Lab. So could you please go to the company presentation? I will briefly introduce you to the company and to our solution. The next slide, please. Thank you. Excellent. Which is the corporate biodiversity footprint. Basically, we'll scratch the surface here and give you an overview of basically how our approach is working and how it could be used, how it is being used, and how it can be used. Well, I'll be happy to take any question or to provide further information later on if you want. So some words about Iceberg Data Lab. We are a fintech based in Paris, providing ESG data solutions for investors. So we do only data, and we are not involved in any business on the advisory side, nor working with issuers to be free of any conflict of interest. And as I will show you, we have a very granular bottom-up quantitative approach on appraising impact assessment on different thematics, of which biodiversity, and regarding biodiversity, we especially won the tender launched a year ago by AXA IM, BNP IM, Mirova, and Sycomore to develop a tool to appraise biodiversity impact, dependency, and positive impact. Next slide, please. So I will spend most of the presentation on that slide, which I hope will give you all the, I would say, the most critical information on how that tool works and what kind of use case could be made with it. So we calculate a quantitative indicator because we believe that the merit of a quantitative indicator is to be free of any human bias, I would say, that you may have when you are looking at policies of corporate, their communication and so on, which tend to favor the biggest one and which tend to favor the companies of which the analyst is or feels the more understands the more company from its country, from the sector he knows, and so on and so on. The merit of a quantitative approach is objectivity. Now, every quantitative approach has also bias, and so you have to be very transparent about the methodology, which is why we published our methodology, and we can circulate it and disseminate it to you if you are interested, to understand what is covered, what is not covered, and what are its limitations. We use a quantitative indicator, which is the MSA, mean species abundance, which is a surface indicator which allows to answer the question, and that's what CBF was developed for. What is the impact of an issuer within my portfolio, excuse me, on biodiversity, which will depend on its process, products, and supply chain. In square kilometer MSA is a metric which is a proxy, but the best proxy that we have to appraise the impact of corporates on biodiversity. The most widely used by scientists, it was developed by PBL, the Dutch environmental agencies, 15 years ago. And it offers us the largest toolbox in terms of damage function, allowing us to appraise the impact of GHG emissions, change of land use, air pollution, which includes release of NOx and SOx in the atmosphere, and water pollution, which includes basically all the major toxic pollutants that could be released by processes. So it is, to biodiversity, the equivalent of ton of CO2 equivalent for climate. And where in the climate, in quantitative approach, you look at GHG emissions and there the impact on climate change. Basically, for biodiversity, we do the same thing, but it's more complex. Where a climate is a flat, we are looking at a building with a multi-layered pollution, which eventually have an impact on biodiversity. And so we look at climate, land use, air pollution, water pollution. Four components, excuse me, which are added up and allow us to calculate a biodiversity footprint. That is what we calculate. For that, our data sources are only publicly sourced data, so data reported by the company, which may come from their environmental report, operational report, so sales and purchases, or financial report. Depending on the data that we have, from the financial data, we model the physical flows. From the physical flows, we model the environmental impact. And from the environmental impact, using a damage function and the Globio model, we calculate an impact on biodiversity. Which means that we have several steps of assumptions which eventually have an impact on the level of uncertainty of the result, which is why with all data points, we also calculate what we call the data quality level, which is an indicator which indicates what source was used to do the calculation, financial data, operational data, environmental data, and therefore eventually the level of uncertainty on the final result. The charm of this approach is that with that approach, we have no data gaps, because with a minimum level of information, meaning turnover and main sector, we can model an impact. What is better, obviously, is that when we have a very granular and specific information on what the company has produced, for instance. At this point, we have 1/3 of the database, and our coverage is very broad, covering all the large corp from the main indexes. So several thousand constituents that in the backup slide, if you want to know the precise figures. We have 1/3 based only on financial data, and the remaining part based on reported financial data, business line by business line, reported output or reported environmental data. So overall, the level of quality of the data set is, for the large corp, quite good. In terms of concentration, we have 80% of the constituent, 20%, excuse me, of the constituent amounting for 80% of the total impact, and it's widely distributed between pressures. In the agri-food, that's change of land use. In the mining sector, that's water pollution. In the equipment sector, that's climate change and air pollution, and so on and so on and so on. An interesting lesson learned is that the merit order is not similar to climate. And that we know from the report published last summer by IPCC and IUCN, IPCC and IPBS, excuse me, which is that you can't have a biodiversity-friendly fund or strategy which is not climate-friendly. But the reversal is not true. So it put under the spotlight some solutions like biomass for electricity, biofuel, and so on, which may be best solution compared to fossil fuels from a climate standpoint, but raise question when it comes to their impact on biodiversity. So some comments, it's a bottom-up, so very granular approach. We model 1,200 different products, from the shoes to the eggs to the power from wind farms and so on. We calculate that on the scope 3 and we normalize based on a financial ratio, the impact. Next slide, please. Which is the last slide, which gives you a clear example of an output. It's EDF, so the French largest power company. So it's self-explanatory. I will not elaborate on that, but you see that the granularity of the result by pressure, by scope, and by source of production. What I want to share with you during this last minute is a use case. We have several different use cases. We have clients like CNP Assurance or SCORE, which for the first time last year published a first appraisal of the biodiversity footprint of their portfolio. We have another client which cannot be named, which are using our data set for engagement purposes. That is the case for the Asset Owner Association in Australia, for instance. And we have also clients working on a discretionary strategy, integrating this data set on top of others or with a focus on that. One of them is public. It is ETF focused on the food sector, which was launched last January by Biociam and listed in Germany and Italy. And it gives you a flavor of basically all the different use cases which can be made with that kind of data set and thematic. And with that, happy to take any questions.
Thank you, Matthieu. Thank you very much. And I would like to invite Beatrice to provide the first question for you.
Hello, can you hear me? There you go. Okay, thanks, Matthieu. I think that's a really good presentation. And because your tool is quite technical, and I really enjoyed reviewing it because it is, as you say, a bottom-up tool that relies quite heavily on kind of scientific method. So from that perspective, I think it's a great step forward in trying to capture actual impacts on the ground. Of course, then I have lots of questions. One is that you mentioned LCA, so life cycle analysis, and it's used by the CBF as the corporate biodiversity footprint as a proxy to assess scope 3. But LCA, you know, that's general sort of assessment of impact across the life cycle of a product. So it doesn't generally allow you to trace impact to specific geographies. And I know you link your it to the GloBio model. So I guess I'm just curious on how you get from the impact as estimated by the LCA to the spatially explicit impact, because we know that with biodiversity, it does matter where on the ground it happens. So if you could say something about that, it wasn't clear to me.
Sure, thank you for your question. Excellent question. The first step of the modeling is an input-output model, a physical input-output model, which is where the 102,000 different products take an important role, which means sector by sector at the NAS4 level, and even in some sector, we created a new level of granularity. We defined, starting from an open source input-output model, the level of constituent of raw materials that you need, for instance, to produce 1 ton of chicken meat or 1 ton of steel. And that is by country, and that is by geography, which means that we inflated price curve, for instance, gas prices, which may vary from one year to another, as you know, and also geography, because, for instance, if you're a manufacturer of meat, your supply chain will come from different countries depending on the country where you sell. And we get that kind of data from sources like FAO, for instance. So that input-output table eventually allow us to have a matrix with a 4 billion combination, different combination between product, country, year, and it gives us a normative model of the geographical origin of flows. But we may enrich that when we have a more precise report. Kellogg, for instance, report year by year the volume of wheat, sugar, and so on that it purchases, and the geographical source. And so here we are at the, what I mentioned, data quality level 2, meaning a more accurate modeling. So yes, you're absolutely right. The geographical component is very important in the model.
Can I just follow up and say, I think that's excellent, because that's one of the sort of, it was a bit of a black box to me when I read it, but it's a super important aspect of the tool, I think. Just out of curiosity, because you mentioned this is data level 2, and I think just to highlight that it's the quality of the data that goes in, of course, that makes the quality of the output, that increases the quality output. And here, transparency in reporting is so important. And I know this is proprietary data, but ERP data, for example, enterprise reporting data, which is at a very high granularity. Is that something that could potentially be plugged into your model?
Yes, so that's definitely something we do. Now you have structured data. That's easy. You have unstructured data, and with that you have to use other techniques named NLP and machine learning. But the difference in the way we can work today and 10 years ago is that now IT technique didn't change that much, but we have an ocean of data published by company, and we can go quite far, very far in identifying and mapping their impacts.
Thank you. So I think we will go to the third presentation before we get into more questions and discussion. So please, Jake Bedford, let us know more about ENCORE.
Great, can you hear me okay? So yeah, thanks so much. Great, thanks so much for inviting me today. And I'm really excited to talk to you about the ENCORE tool. So again, that stands for Exploring Natural Capital Opportunities, Risk and Exposure. So launched in 2018, it was a collaborative tool developed by UNEP-WCMC, UNEP-FI and Global Canopy. And at its core is a database that shows the links between economic activities, the ecosystem services that these activities depend on, and the natural capital assets that underlie these ecosystem services. So by combining this data and the materiality ratings it provides with financial portfolios, it allows large-scale analyses of the dependencies and impacts of financial portfolios on nature. If you go to the next slide, please. But over our focus over the last 2 years has been on developing a specific module within ENCORE that will help financial institutions to understand how they can move towards aligning their portfolios with global biodiversity goals. And it's this module that I'm going to focus on today. So if we can move to the next one. Sorry, can we just go back one? Sorry. Yeah, so the tool focuses initially on agriculture and mining sectors. These are two sectors identified as key to driving global biodiversity loss. And focusing on these sectors, the tool aims to address the following questions. So what is my current portfolio's potential to reduce species extinction risk and ecological integrity risk? And I'll go on to that in a second. Where should I focus engagement to move my portfolio towards alignment with global biodiversity goals? And what actions can I take to do this? Thanks. So if we can go to the next slide, thank you. So the whole structure and the premise of the tool is based on the principle that the contribution of a financial portfolio to global biodiversity goals will be determined by three main factors. One, the scale and magnitude of potential biodiversity impact of the companies within the portfolio. Two, the current alignment status of the ecoregions in which the company operates, so the sort of context of the status of the ecosystems operated in. And lastly, the biodiversity management practices applied by the companies. So if we go into the next one, please. So the core output of the biodiversity module is this idea of quantifying the scale and magnitude of potential biodiversity impact. So first of all, the main input requirements to the tool varies depending on whether we're looking at agriculture or mining. So for agricultural portfolios, there is currently very limited availability of spatial data on the location of specific agricultural areas, and in particular, limited data on the links back between these individual assets to ownership. So the agriculture module element is quite coarse, and we currently use the location of cropland and pastureland at the country level, with then two main user inputs options. Firstly, combinations of hectares of cropland or pastureland within countries. So for example, you enter 10,000 hectares of cropland in Indonesia or 1,000 hectares of pastureland in Brazil. And secondly, you can input combinations of turnover in countries. So for example, a company with $10 million of turnover in Brazil. And this is then used to estimate land occupation. In contrast, for mining, we have been able to use an asset level database provided by S&P Global. So users can select company and country combinations, and it will link to specific spatially resolved assets. So once users are past the input page and they've created their portfolio, this is the first thing they will see, this dashboard. So this component shows the high level values of two global goal relevant metrics. The left-hand side of this image focuses on the potential to reduce species extinction risk, and the right on ecological integrity risk. So for the species extinction risk metric, we rely on the species threat abatement and restoration metric, which is being developed and recently launched by the IUCN. And for the ecological integrity risk metric, we use as a basis mean species abundance for land occupation, to which we added a spatial weighting for the biodiversity importance of the different areas associated with the portfolio. And in our tool, this importance weighting is based on the size and intactness of the ecoregions operated in. So it translates the sort of how much biodiversity is being lost with the mean species abundance to what that means for the overall integrity of the ecoregion through the weighting. For both metrics, you get the overall score associated with the portfolio, as well as an indication of whether this is above or below average compared to either the sector average for mining based on the total mines in the database, or a global average for agriculture. If we go to the next slide, please. So this high-level overview is then broken down further within the dashboard. So for the metric on potential to reduce species extinction risk, we provide a list of the sub-national administrative areas associated with the portfolio and the portfolio star score within each. And for the ecological integrity risk metric, we provide a list of the ecoregions associated with the portfolio and the corresponding score for each. And these tables are ordered from highest to lowest, so it helps prioritize those areas with the highest opportunity or risk first. As I mentioned before, for agriculture, the data is quite granular and we don't know the specific location of the farms or the assets. Instead, we provide a representative minimum and maximum ecoregion within each country. If we go to the next slide, please. So this idea of then relating this potential to the current alignment status of the ecoregions. So focusing on ecological integrity, we have assessed whether the areas associated with the portfolio are on track for meeting global biodiversity goals. So for this, we use ecoregions as the unit of spatial analysis, and we break down the overall score, so the overall portfolio ecological integrity risk score, by how much of it sits within the different ecoregions that are more or less likely to be aligned with global biodiversity goals. And this assessment is based on two main factors. One, whether the ecoregions are increasing or decreasing in ecological integrity. And second, whether they are sufficiently or insufficiently protected related to global goals. And this is based on peer-reviewed work by Bayer and colleagues and Dynasty and colleagues. To accompany this breakdown, we provide then minimum levels of biodiversity management actions that are needed by a company for them to be considered aligned with global goals by operating in that ecoregion. So this is to recognise that we can only talk about potential alignment here, and that ultimately we don't know with the data we have what is happening on the ground in the locations where companies are operating in. So we can say in an ecoregion that's declining in integrity and is insufficiently protected, then the company should really be achieving net gain in order to be considered aligned with global goals in that region. But if they're operating in an ecoregion that's already met its protected area targets and it's already met its increase in integrity target, then potentially just a no net loss target is sufficient to be considered aligned. If we go to the next slide, please. So as I mentioned before, it's really challenging to explicitly assess alignment because individual assets and companies, because we lack the specific biodiversity management information that's really key. So the tool therefore focuses on providing guidance on actions that financial institutions can take to work towards alignment. So we provide a list of questions that can be asked in engagement discussions with companies, and which, if correctly implemented, will help ensure companies are contributing to global goals around ecological integrity and species extinction risk. If we can go to the next slide, please, thanks. So let's look at a practical example of how this tool could fit into these developing an engagement strategy. So let's think of an asset manager with a mining portfolio. They would like to set a nature positive strategy. There are 5 key steps they can follow. Map exposure to high risk areas, set targets and then associated more detailed and responsive performance indicators, formulate an engagement strategy, implement the engagement strategy, and then using these performance indicators, check and report on progress. So the ENCORE tool really helps with the first stage, the third stage, and the fourth stage, with the portfolio overview helping to set targets, but potentially more specific and responsive indicators needed to track performance through time. So I'll just provide a quick overview on the next slide, just to summarize the information that I've provided today. So the ENCORE biodiversity module focuses on agriculture and mining initially, 2 sectors, driving biodiversity loss, but with really contrasting data availability. Calculates 2 goal relevant metrics, the potential to reduce species extinction risk through STAR and ecological integrity risk through a weighted MSA metric. It aggregates metrics to portfolio level exposure indicators and provides guidance on engagement strategies to contribute to global biodiversity goals. And we are hoping to fill some of the limitations and data gaps with an updated version to be developed and worked on in 2022. So thank you. That's it from me, and I'm happy to take any questions.
Thank you very much, Jake. So I will invite Flora for a first question before we go to the larger discussion. Please, Flora.
Thank you very much. Thank you very much, Jacob, for presenting this tool. I'm just curious because did I understood this was the first time I kind of tested it, and did I understand it correctly that you kind of feed in your portfolio, or the companies in your portfolio, but the output is on the portfolio level? It doesn't. Does it show individual company results? Yeah,
so it's a good question, and this is something we're hoping to discuss more with our data providers next year. So there's a practical thing of our mining data is from S&P Global, so our data agreement at the moment doesn't extend to be able to name specific companies, but what we can get to is subnational boundaries and ecoregions to focus on. So yeah, the idea is to think about it at the portfolio level of the regions and activities you should be engaging with, but at the moment we can't. With agriculture, the data isn't there to have individual companies, and with mining, our current data agreement means that we can't get to individual company level, but we potentially are looking at how we can integrate displaying specific assets and companies in the future.
And since this is with, okay, so from our perspective, at least the way that I work, I would use your tool in a reporting purpose. I wouldn't be able to use the tool, in engagement or, in otherwise kind of comparing different companies like I would otherwise do. Considering that the S&P is, of course, a commercial company, is this something that investors can access somehow?
Yeah, so S&P data is, I think, accessible to investors, which is why we couldn't show the full granularity of their data through our tool. What you can do, though, is when you can input different combinations of companies and add different companies and different locations. And obviously, we'll show you how that changes. So you might add a few companies and your star score might really increase because those are companies specifically are operating in very sensitive areas. So yeah, it's a good point, and it's that yeah, we're hoping to be able to provide more granular breakdown of the portfolio score. But if you're quite early on the biodiversity journey, it does help you see, okay, the companies I'm investing in do have quite high exposure, because, for example, you could show that your overall portfolio is 10% of the sector's species extinction risk you're associated with. So it does help with those very early stages of understanding your overall exposure. But yeah, at the moment, to be able to then go to specific companies, we appreciate the output is slightly challenging for that.
Yeah, it is, and there is a lot of information, a lot of good information in ENCORE. So I really hope you are developing the tool also. So thank you very much.
So thank you. And now we will discuss a little bit broader with questions from both Beatrice and Flora. We also have some questions already in the chat, and I will jump in a little bit later after Beatrice and Flora has been able to put some more of their questions. So please, if all of you will turn on your cameras, and I think Beatrice will start putting some more questions. Thank you.
Okay, well, I think I will just stick with the ENCORE then, so, since we're all in the mindset of ENCORE, and just have a similar follow-up question that I posed to Matthieu, which is a bit technical, but I think it's fascinating to try and penetrate this tool. It's quite intense, and it's not entirely easy to discern what is being done. So it's a similar question in that I'm keen to hear how you actually link again the portfolios, rather the companies that are in the portfolio, to the ecoregions. That wasn't clear to me. Sourcing areas, headquarters. How do you do it?
Okay, yeah. So for mining, it's just the location of specific mines.
Sure.
So if you put in your 3, so that's point data, which we can overlay with ecoregions, and we can overlay with the 5-kilometer resolution star layer, so you can get quite specific spatially explicit metrics for mining. Again, for agriculture, that data we just don't have access to, and so the way we do it is at the country level. So we map the location of cropland and pastureland for the country, so we can get the total star score for, say, cropland in Brazil. Then we can say that through your turnover data, you can estimate that you're occupying 10,000 kilometers of that area. And so we can then start to provide sort of an average star per hectare score or an ecological integrity risk score. And then with agriculture, we break down by ecoregions by providing the representative one. So that's the ecoregion within the country that has the most cropland or pastureland. So in other words, you could think of it as like the most likely ecoregion that you're investing in or sourcing from. But then we provide a maximum and a minimum risk, so we can show the spread of risk within a country, even though we can't link to a specific asset for agriculture at the moment. We're hoping to, as I said before, to increase the granularity of that data. So we're hoping to work on at least having specific commodities, agricultural commodities, and then potentially working with other tools and data providers to explore how far we can get in terms of specific assets and companies. Does that answer?
Yeah, it does. Thanks. And I noticed that you did say it in your presentation, but just making that clear link. Can I just follow up and ask, because this tool is really interesting and has a lot of information, as Flora said. It's currently only available for agricultural and mining, and those are both primary sectors. But I'm curious to hear you reflect on, secondary and tertiary industries are likely to have most of their biodiversity impacts in scope, maybe 2 or 3 particularly.
Yeah.
So I'm wondering, as you expand, what do you foresee to be the challenges in capturing relevant impacts for other sectors?
Yeah, that's a great point. So with our other sort of area of the tool where we're looking at sort of more qualitative dependencies, we are starting to focus on value chain links. So how you can link that if you're in this sector, you're likely to have your impacts through mining sector or agricultural sector, but within your value chain. And with our biodiversity module, we're also hoping to look into that in the future. So yeah, we started with agriculture and mining for two reasons. Firstly, because they came out of a sort of a materiality assessment as really key for impacting and depending on biodiversity. And also to explore two sectors with these really contrasting data availability. So mining, we have good asset level data, but actually lower availability of, for example, modelled biodiversity impacts compared to agricultural land use. Whereas agriculture is the opposite, where we don't really have much granular asset data, but there's a lot of models. So, for example, the Globio model goes into quite a lot of detail around different agricultural land uses. So that's why we wanted to start with those. And in the future, we're hoping to expand into other primary sectors, but also then link to higher up the value chain. So there will, at the moment, a company would have, or a financial portfolio would have to understand those links themselves first before linking to those sectors, but we're hoping to build those links into the tool eventually. But yeah, the value chain assessment is a big challenge in biodiversity assessment in total.
Flora, over to you, maybe. Sorry.
Yeah, Jake, I'm just trying to figure out like exactly how much information we can get out of you with regard to the specific companies. The tool can be used, of course, by each individual investor to map their own risks based on their specific portfolios, and this is on a portfolio level, not company level. So, just thinking from, the investor perspective, a lot of investors are part of collaborative engagements. Mm-hmm. And the collaboration itself may want to focus not, on specific portfolios, but rather on the highest risk companies in the highest risk regions. Would you consider, or is it possible to create, for instance, kind of general watch lists of the worst performing companies with specific key asks to ask each company for that particular region, for instance?
Yeah, no, it's a really good point and idea. I think, to be really honest, at WCMC, we're a UNEP associated organisation, so we're not a ratings company, or we're not a sort of a private consultancy that's in. So we wouldn't. Our mandate isn't necessarily to sort of name a company with a specific impact. But you're right. The idea of prioritizing companies is key. So I think the tool would more help with the spatial element of that, of understanding the regions that are highest risk. And you would be able to, for example, agriculture, put in specific company information and develop those ranks yourself, or as an engagement, as a collaboration. But I don't think necessarily named companies and named risk scores would be our mandate. But also there's another really important element to that, is that these are, especially using things like MSA, they are potential impacts. And so there is a lot of risk in saying this company's impact is this, when we don't have the information, as I said, on how they're managing that risk. Are they putting in mitigation? So I think there would be some concern of that nuance in that communication, that their potential impact based on their assets is this. But a lot of that information, if you're using MSA, it's a globally modelled response applied at the local level. So it's always going to be the potential impact. So there was a risk there of adding these numbers without the context of how they're actually managing that risk, if that makes sense.
Yeah, it does make sense, but it kind of, that's what makes it a bit difficult also.
Yes, exactly. Yeah.
Indeed. So actually, I have a kind of a follow-up question, but to Matthieu, if that's okay. Kind of understanding, the difference between the two. Because your tool looks at specific companies, and I'm just wondering, like the granularity of the tool. You showed EDF as an example. I'm thinking of, maybe an agricultural company. So, for instance, can you compare a company that produces palm oil in one country with a company that produces coconut oil in another country?
Thank you for your question, Flora. You will see in the backup slide that I shared with you and that will be circulated to the attendees. A study of how the results are distributed in a sector, namely food. And first lesson, there is a wide distribution which depend on the supply chain. So you provide you are a provider of meat. What kind of meat? Geographical location, modeled or reported of the supply chain. So products, that was for the meat, supply chain, that's what I just mentioned, and processes, that's in the food sector, the level of food waste. Here again, normative or reported. So to answer your question, yes, indeed, we can and we should actually distinguish within the vegetable oil, palm oil with other commodity, and especially the couple commodity geographies which are prone to deforestation: palm oil, beef Brazil, soya Brazil, cocoa, excuse me, West Africa, and so on, for which there is a change of land use component, and there is a component related to GHG emissions, which is related to the existence of or not of a certification, and globally the amount of output certified, output related to deforestation. So that's a model which is well, quite granular. That was the long answer. Short answer, yes, and that data can be accessed.
Okay, thank you very much. Over to you, Beatrice.
Okay, great, thanks. I have actually more questions for everyone, but I'm gonna ask some questions of Fredrik. So you've been left idle for a while. I wondered, your tool relies on sustainability reports, contrary to the other two we've heard of, and some sectors will have operations that are not clearly linked to land use change, for example, or biodiversity, while others, it's going to be very clear that the biodiversity impacts are very obvious, like we talked about ag and mining here, for example. And so therefore, it's going to be easier to set maybe for them explicit targets or goals if it's in the scope 1 of their operation. How does your tool deal with the possibility that companies with the biggest impact on biodiversity are actually the ones that end up talking the most about it, and hence end up with a high score or green in your tool?
It's a really good question. Thank you. I would say that first of all, the questions asked are generic, but what we do is also looking upon the supply and supply chain and value chain, both upwards and downwards, meaning most companies do have an impact on the nature somehow. But for certain companies, that impact is certainly bigger. So what we will do further on is to make it also industry specific and compare companies in the same industry. Because today, I mean, it could differ. The kind of baseline differ, I would say, between different companies. It's a good question, and we're on it. We're not there yet.
No, sure, I understand everyone is developing this. We're in early stages. So, but I do have another question, and it's, how do you assess whether, ongoing actions by the companies that you're looking at actually make the goals that they have set, make them the appropriate ones to feasibly reach the goals. So an example, if you have a goal that's set to 2030, which is quite common, how does your tool deal with situations when companies, set ambitious goals but do not necessarily roll out what I would call like appropriate scale of action to feasibly live up to them? Do you have interim checks? Do they remain green in your tool until 2030 when the time is up for that goal? How does it work?
Yeah. Good question once again. Well, we try to not get in touch with the companies and deep dive because we want to stay objective. Once you do that, you will be subjective. And many of these companies, obviously, since we're a consultancy firm, are also customers to us. And the credibility, I would say, would not increase if we did that. But I mean, some other part on the market could do that as well. But I don't think it's Ecogain that should do it. But what we actually do, we also have questions that are focusing on action, and we also ask questions about the correlation between targets and action. But by that said, we don't have the actual KPIs, so we can't see those improvements yet. But they will come. They will come.
Okay, just one final question, then I'll leave you, Flora. But it is because, and maybe this is a little bit cheeky, but I looked at your the top ranked companies in your report, and I was just curious, like, what does it mean that, for example, and okay, I'm pointing fingers, so I don't mean to, but I just picked an example. But for example, Stora Enso, big forestry company, which we know applies large clear cutting as part of their forestry model, and which we know may have different impacts when it comes to carbon sequestration and carbon release, but certainly does have big impacts when it comes to biodiversity. And they rank 10 in your list of the Nordics, so top 10. As an investor, how should I be thinking about this? Because yes, okay, they're maybe better in setting goals than some others, but when it comes to biodiversity, we know that it's the cumulative effects that do matter as well. So could you reflect a little bit on that?
Well, as said, this is not one-to-one with nature capital, I would say. On the other hand, what this says is that they have an ambition to really focus on biodiversity. They have an ambition to take action. They have an ambition to improve. And for me, if I would be an investor, that would be important to know.
Beatrice, can I just jump in with a question from the audience then? Because it's a little bit related to this, and for you then, Fredrik, that the question is that since Sweden, Finland and Norway have a more industrial view on biodiversity linked to pulp, paper and biofuels than continental Europe in general, would there be an inherent risk that the Nordic-Baltic focus of Ecogain will result in views that are not coherent to the European view, which was the case with the EU taxonomy process for a while? What's your thoughts on that?
Yeah, for sure. I mean, that could be the case, but that also one of the strongest area with the Ecogain Biodiversity Index. If that is the case, we will also see those figures in the index, and the difference between Europe and or the rest of Europe and the Nordics, and then we could put the finger on what is the difference in that. And another thing worth mentioning is that, I mean, we really have a close look at the taxonomy and what is coming up, and we are addressing that in our upcoming EBI in 2022. So far, what we've seen, the questions currently are pretty much in line with the taxonomy so far. But yeah.
Okay. Yeah, thank you.
Thank you.
back to you, Flora and Beatrice.
Flora, do you want to go? I still have some questions from Matthieu, for example, but I leave it to you if you want to take.
Yeah, maybe I could jump in and ask also Matthieu some questions, if that's okay, and you can, follow up on them, Beatrice. So Matthieu, you looked at the, it depends on, where you get the data from, of course, and you have self-reported data and you also have assessed data. So what is the ratio between the self-reported versus assessed data?
We have 1/3 so far of fully modeled data and 2/3 of the database using reported data, a complete comprehensive set of reported data or partial. Some companies report the amount they purchase, but not the geographical origin. So we apply the reported amount to the normative distribution. Some of them both. Some of them the geographical origin, but not the amount. So you see, it's a kind of a jigsaw, which is why we created that indicator, data quality level, which reflects the level of transparency of the company, the constituent, and therefore the level of uncertainty of what is eventually modeled.
Okay. And can you say something about the universe of the companies? What universe are you working with right now?
Our core research universe includes, to make it clear for everyone, basically all the constituent of the MSCI acquis and the issuer of instrument in the euro and US dollar aggregate. So listed large cap, excuse me, in the world, including emerging countries, and large corp, excuse me, of investment grade instrument denominated in euro and dollars. That's our core research universe when we enrich the model with the support of the analyst, because we have analysts which are specialized by sector, mining, power, raw materials, agri-food, and so on and so on and so on. That's our core research universe, so 3,000 lines approximately. But beyond that, we have a financial data provider, and I describe the model. With the financial data, we can model basically what the company is doing and calculate a footprint. That's more fit to extend the coverage of a reporting, but because the uncertainty is higher, but it allows us to have a broad coverage, basically. And one important thing that I wanted to mention too is that that platform was designed from the start to cover all asset classes, meaning issuers, meaning fixed income, and meaning that from a scientific standpoint, you really can't have different results for an infrastructure, the owner of an infrastructure, the investor in infrastructure debt, okay, and the equity, the appraisal of the equity of the company owning the infrastructure. You should have the same result. And so for that infrastructure, the infrastructure is appraised like a single asset company, basically. Otherwise, you have serious consistency result when you want to aggregate everything at portfolio level, and you have a different view of an infrastructure and a listed company owning that same infrastructure. So that the scalability of the tool throughout all asset class is important.
Thank you for clarifying. And just one final question to you. Could you perhaps elaborate on how you would develop or use the tool to measure positive impact on biodiversity?
Yes, thank you. So we have a roadmap with the steering committee of the corporate biodiversity footprint. So we have several dozen of clients using the tool for various use, as I mentioned. And we have a steering committee with some asset owner or asset manager willing to contribute to its extension. Let's say the four I mentioned: Carner Blue Capital from the US, Marshall Wace from the UK, and in 2022 we'll develop 2 new KPI: the dependency, including the monetarization, okay, which is to biodiversity what physical risk is to climate, okay, and the positive impact, and we'll start by that one, which is the equivalent to biodiversity of what emissions saved are. On that topic, we should be very cautious because it may lead to greenwashing. We have to be very, very cautious, which is why we are happy to work with a consortium of investors. Every one of them has its own DNA, policy, and so on, but we will align the language and the approach to agree on what is a positive impact and what's not a positive impact. That's important because, as you know, in climate, situation is confusing, let's say. But in biodiversity, the difference with biodiversity and climate is that you may have directly positive investment if you invest in forest, land rehabilitation, and so on, contrarily to climate. So here we have to be, well, very rigorous, and we'll work with our scientific committee, by the way, on that. So we'll have something already, I think, by the end of Q1 next year.
Looking forward to that. Thank you very much. So over to you, Beatrice, or perhaps Åsa.
Yes, maybe I could jump in with some questions from the chat. There are some generic questions here, which one of you might be able to answer. There's one on the work demand on reporting from the companies compared to climate reporting, for example. Do you foresee that this will be a fundamental hurdle to mid-sized firms, for example? What does anybody have a thought on this? Yes, Matthieu, please.
Thank you. Just to clarify your question, Esa, you're thinking about issuers or investors?
No, I think the person who asked this question is concerned about the work demand at the firm level, the company level, to provide this data in comparison to climate. Do you think it will be a considerable working effort or demand for the mid-sized companies?
For the issuers, then? The corporates, I mean.
Yes.
Well, you know, the activity of the company have eventually a serious impact on the environment. So transparency here is, I would say, at the end of the day, an enabler for them to have access to capital, finance, and so on and so on. So it revolves about the question of their responsibility and risk, and afterwards to their access to capital. So I think that what is important, so transparency on that, I think will not be an option anymore in the future, because it will be more and more a risk, an environmental risk, a liability risk, a reputation risk, and a financial risk. What's important, I think, is to get two things. One, normalization, because, you know, we are using, as others do, the MSA indicator. We can't have several metrics used. So we are using in our architecture the rules and guidance of the GHG protocol, which can be replicated in terms of scopes, how do you handle leasing, and so on and so on. And I do hope that we will see convergence when it comes to natural capital. Standardization is important. We participate to the Align initiative and to its technical hub at the EU level. And the second thing, which I think Europe is moving on and should accelerate, is the constitution of the Green Data Hub, where all companies will, under a standardized format, report like they do under the EU directive, their financial data, the XBRL format, you know, their operational and non-financial data. So they are not, requested to provide information under different format to a zillion of data provider, rating agency, research agency, and so on and so on and so on. I think that here is a critical enabler, in my opinion, in easing their life while giving access to the stakeholders to critical information.
Yeah, thanks. Jake, do you also have a comment or no?
Well, I think the echo of the need for standardization and streamlining is really important. So yeah, we convene the Align projects. That's a little bit of a plug. But I think, if we can get everyone, if we need consensus from the sort of scientific community and the investment community of what needs to be reported, and then having that standardization, I think will help ensure that the burden is then less, because it's what is reported is really strategic and sort of equal between everyone else.
Yeah, it would be in the interest of everyone. Yeah. Okay, so and just maybe one more from the audience. Thanks for all the questions here. I think Matthieu had already a little bit of answer to this one, but perhaps the two others of you. The question is, how does the various tools address biodiversity impact versus biodiversity dependency? And also a little bit on how the opportunity side is handled in the assessments. So Jake and Fredrik, maybe you can start, Jake.
Yeah, it's a really great question, and I think dependency is really important because that really helps define risk as well as just impacts. Our biodiversity module, which was all about goals, is impact focused, so that one doesn't address dependency. Our wider ENCORE tool, as I mentioned at the beginning, that has qualitative rankings of the relative dependency of different economic activities on natural capital assets. So you can say that agriculture, for example, has very high dependency on species and habitats because of the high dependency on pollination. So that's what that database provides. But the biodiversity module at the moment, we don't feed back the impact, for example, to dependencies. But yeah, that's a really good question.
And about the opportunity side, like the positive side.
Yeah, so that's what I think when we think about risk of impact, we sort of flip that as the opportunity to have positive impact. So for example, that's exactly what the STAR score measures. It's saying that because of the species that are in this area and their threat levels, because you're operating in this area, you have quite a high sort of stewardship of the extinction risk of these species. So what we do is highlight these areas as it, so that metric, it highlights those areas to say, if you were to manage properly here and reduce the pressures of mining, you have a really disproportionate positive impact on reducing the overall species extinction risk. So I think where you have risk of impact is also the highlights areas where the opportunity for meeting the goals is highest. Yeah.
Thank you. Fredrik, do you want to comment on that question as well?
Yeah, for sure. We have questions about the dependencies and the value chain assessment. For instance, assesses its impacts and dependencies on nature in materiality and value chain assessment. I mean, for instance, that we have a few questions upon that topic. When it comes to opportunity, not that much, I would say. Unfortunately, it's something that we take with us from this. We have, we have questions about biodiversity net gain and such stuff, but it's not really about opportunity, business opportunity. It's a good point.
Yeah, thanks. It's certainly a process and development going on. So
it is.
So Beatrice, would you want to jump in, and I can come back a little bit at the end as well?
Sure, thanks. Now I wanted to bring the conversation back to the topic of transparency, actually, because I do think that it's at the heart of what we're dealing with as well. Matthieu touched on it, and so I have a question for IDL, actually. You have a disclosure quality level, which I think is actually really interesting, and it's attached to each data point, as I understand it. A question is that how does that get used? Does it get aggregated for a particular company, for example?
Thank you, Beatrice. Since I have the opportunity and you underline the complexity of the approach, let's first have some publicity and just say that we will organize a webinar on the CBF longer, so with a pace-by-pace explanation, because we acknowledge that indeed it's fascinating but complex. To go back to your question, first a comment. When we developed that indicator, it was to provide transparency, uncertainty in the result, and to my surprise, to be honest, some of our clients are using it in their engagement strategy to say to some investors, hey, look, you report less than your peers, which we did not anticipate it and is interesting. That indicator, the way we calculate it, is that we calculate it for each pressure, because obviously we have a way better level of reporting on GHG, for instance, which is one of the pressure, than for TOX or land use. And we weight it on the impact of the pressure. Meaning that when a company does not report, an agricultural company, it changes the surface of the land use used in its operation, which never happens, okay? But it represents a major source of impact. Its data quality level will be very low, eventually. Contrarily, a steel manufacturer may impact GHG emissions, very transparent, generally speaking. The data quality level of that pressure is weighted, and so the overall data quality level will be quite good to reflect the weight of the impact. That's the way we have done that. Does that answer your question?
Yeah, it does, and I think I flagged this because I think it's a really important step in the direction of disincentivizing companies to disclose more. You never want to disadvantage those who disclose more.
Yes.
And I think it's interesting to hear you say that your clients, your investor clients, have actually picked up on this and are using that as well as a pressure point towards their investee companies. Mm-hmm. I wonder also, this is me reflecting now on the sort of a next step, because what's the possibility of also penalizing those that do not disclose and therefore have much poorer resolution data that you can use, adding biodiversity impact points or some other kinds of thing to really get away from this and drive towards as much transparency as we can while waiting for standardization and the CSRD, for example.
Yes. Let me be very quick. When you build that kind of model, you have to be very, very cautious about one thing. You don't penalize company for their transparency. Meaning that when a company does not report, and it is customary to report, generation mix in the power sector, if a company does not report, we will assume that its generation source are coal. In other sectors, we'll adopt a normative model and make sure that the model is reflects the average of the market. But that's something we constantly test, making sure that the most transparent players are not penalized compared to lack of transparency. That's very important in terms of governance, of the model.
So over to you, Åsa or Flora, if you have any more questions before we finish.
Esra, do you want to have a final one?
No final question from me. It's fine.
So there are some more questions. I can just, one which is more on a generic level that is of interest. Do you have an opinion on how far other big data crunching firms have reached into in terms of biodiversity tools on company and portfolio levels, and the support they provide on engagement processes and so on? So do you have a view on how far has the development come in general? So, yeah, Matthieu?
I may give a very factual answer. I do recommend that you have a look at the report published by the EU Align initiative, which provide example of several approach, illustrated use case, and so on and so on. You know, with a normalized view and which shed some light on your question.
And I would say that there's a lot of development ongoing. That's my view on it, but still at various stages. And I think we also said that we will try to provide written answers to the questions that was provided in the chat that we didn't have the time to answer at this stage. And also that there is this report from Finance for Biodiversity, the guide on biodiversity measurement approaches will also be available on the Swesif website, where you can look at their independent evaluation of some other relevant tools. Because, yeah, there's a lot going on and we need to act under this uncertainty and learn more about biodiversity and finance for sure. So yeah, thank you very much, and thank you, Emma, for jumping in.